you and your families are safe and in good health. Before we begin, I would like to request you all to please be on listen-only mode. There will be a Q&A session at the end of the conference. You can share your questions on the chat window and we'll take them one by one. In case you drop out, please rejoin us using the same invite link. So today we have with us Tech Mahindras Managing Director and CEO CP Gurnani, Chief Financial Officer Manoj Bhat, and Head Corporate Development and Global Head for Healthcare and Financial Services, Vivek Agarwal. Without any further delay, over to you, CP.
Hey, good evening, everybody. Sorry to keep you waiting, but for some of you, you know that this is, more of a regulatory requirement. But thank you again, guys, for waiting. Happy with the results, and you all have the results in your hand. When we had last met, I had spoken to you and said that your company is looking at how to make the best out of the social tragedy, this global shock that the COVID has caused. We had also discussed with you that a part of our company would be repurposed around some of the new solutions that are required when people spend so much time at home or during lockdowns, semi-lockdowns, or unlockdowns. We had also discussed with you that as a company, we are conscious that we need to reprioritize on some of the areas where we could do better. So your company repurposed themselves on growth, and we looked at the sectors which are likely to do better. We looked at some of our operating and financial metrics, and we decided that we are going to break it into a few parts. And some of our executives took direct responsibilities of managing those operating indexes where we could have done better, or financial performances that we could have done better. The third area, we did realize that during this challenging times, none of us knows what the future and how long this tunnel is. So we definitely put in a special task force on looking at our cash flows and capital allocation. And last but not the least, we have continued to look at the future, and we are investing in new ventures. We are investing in building a company which is going to be even more resilient in future. So, because we wanted to show the urgency, the initial words given by Manoj Bhat, our CFO, was break it into three parts, where he had said reimagine every process. Then he had given us a word called rally. That means as soon as we are able to tie up all the process ends, we should be able to run faster. And number third, he said, was rise, rhymed with the Mahindra rise tenets. I converted reimagine into repair, and I shared with you last time that we're calling the three internal phases as repair, rally, and rise. The only reason we wanted to show repair was because we believe there are areas where we need to repair and become better. I think that urgency has started reflecting in all of my 124,000 plus employees. People now understand that yes, Tech Mahindra needs to become a lot more agile. So on the growth side, Manoj will share detailed results with you, but we have grown 4.8% sequentially quarter on quarter to deliver about 1,265 million. Very, very happy with the progress. Similarly, on our net new deal wins, signed up 421 million. And again, it only reflects that the demand recovery is coming back. For us, US and the emerging markets have done well. Europe has been relatively slow, but I think Europe will come back much stronger. So all I can say is EBIT margin going up by 410 points. Growth coming back at 4.8% quarter on quarter. I think does signify that your company's strategy of focusing on 5G, a company focusing on cloud and AI is working out well. And we will continue to develop more capabilities as we go along. But I think in general, happy with the progress your company has continued to make. Similarly, our high free cash flows, you've seen the balance sheet, you've seen how the cash conservation is helped. The board has authorized us with a special dividend this quarter. And I am very, very clear that while it's going to be a difficult external environment, but because technology is the ultimate glue here, digital is the ultimate glue, all of us can rally together, and we are confident that we will continue to be on the trajectory of growth, continue to be on the trajectory of profit improvement, and continue our commitment to technology, whether it is 5G, cloud first, AI first. And I'm very happy that the board is giving money back to the shareholders, and bit unusual at this time of the year, but I'm really happy that we are announcing a special dividend. So in general, Tech Mahindra continues to win a lot of awards in HR. We have won some of the best awards in inclusivity and diversity. We have won awards on Great Place to Work. We have won awards where we are considered one of the best workplaces for women. Similarly, on ESG, on sustainability, I think your company's focus is being recognized by a lot of external agencies, and we are doing extremely well. So your company continues to be passionate about CSR, about education, about sustainability, and also will continue to deliver good results. So I'm going to request Manoj Bhat to share the financials in detail, and again repeating, your company will remain committed to its core strategy of building modern digital technology business, continue to build with partners like SAP, AWS, Microsoft, or Google, will continue to create its own platforms in AI, and I feel a lot more confident about the future. Over to you, Manoj.
Manoj, you are on mute.
Thank you, CP. As many of you would have seen, revenue for the quarter was about 1,265 million. If I split that, communication business grew 3.2%. Our enterprise business grew about 5.9%. So if you really look at the growth, it's been strong across both segments. If I look at the vertical-wise split, I think we saw BFSI, communications, high-tech, retail, healthcare, all of those verticals growing really well. If I look at a different cut of the results, I think we saw a supply side recovery, which was impacted in Q1 because of the COVID conditions. We saw a demand resurgence across multiple verticals. And of course, we had some currency gains because of the fluctuations in the currency. So all of those have contributed to this robust growth in the quarter. The other side of the story is in the funnel and the deal wins. Our funnel continues to be very robust and almost at all-time high levels. And we have converted 421 million of TCV into wins, which is again back to our pre-COVID levels. Remember, we report only net new wins, and so we don't report all wins. We don't report existing business renewals. So it is back to our pre-COVID levels. I think the key highlight, as CP mentioned, was the margin improvement. Again, all of those measures which we put in place in the repair phase have come through. I think our supply side benefits have come through. Demand side recovery has helped, while our efficiencies have helped margin improve by 160 basis points, whether it is on subcontracting, whether it's on offshoring. And all of that has helped in terms of this 410 bips increment. I think the other side, if I look at the cash flow, and CP touched upon it, I think our DSO is at 97 days, which is the lowest it's ever been, I think almost in 15 or 16 quarters. And our free cash flow was 235 million, which is the second highest in our history. So in terms of our robust cash position, we have about 1.56 billion in cash. And we announced a 15% rupees 15 dividend in line with our stated goal of returning excess cash. I think what I would like to do is think about how do we consolidate the gains from here and build upon what we have started. I think the journey has just started both on the revenue side and the profitability side. And with that, I would like to hand it over to Vivek, maybe to talk about the acquisitions for a few minutes and then leave it open for questions.
Yeah, thanks, Manoj. As you would have seen from the press release, we've announced an investment in two businesses, both in the Australia-New Zealand region. And both these businesses, Momentum and Tenzing, are focused on multiple sectors, but very heavily focused on the financial services sector. We do have a very robust business in financial services in the region, and the acquisition of capabilities in digital transformation, cloud engineering, DevOps, agile will help us take our clients on our digital transformation journey. We also believe the added capability and the synergy it would generate would help serve our clients significantly better across the spectrum. Both these transactions are subject to the requisite approvals and closing conditions, but we expect to close them in the next, between 2 and 6 weeks, depending on how much time these approvals take. Abhilasha, over to you.
Thank you, everyone. We will now be opening the floor for Q&A. If you have any questions, please, you can write them in the chat column and we'll take it one by one.